This is what legendary investor Paul Tudor Jones said about Chair Powell on Squawk about an hour ago.
What would you be telling Jay Powell right now?
Oh, I'd be saying look for another job. I think this is one of the most challenging periods ahead for the Federal Reserve Board in its history.
Went on to say, Jim, can't think of a tougher macro environment for stocks and bonds, and that inflation is going to be more pernicious than we think, harder to handle down the road.
Well, look, I think that the idea of looking at the S&P and deciding that maybe it doesn't work is great if you're a billionaire. I'm on Coterra, I'm on Devon, I'm on Diamondback, great hedges, oil companies, all very well run, all giving you between 7 and 9% yield. If inflation rages, they'll get more. Better than cash, better than the 3-year, better than 5-year. But I'm on those calls. Okay, now, Coterra hasn't had their conversation. Theirs coming up in Devon. I'm friends with Rick Moncrief. This is not what they do. Okay? They do not look at, the billionaires do not look at stocks because stocks are too small for billionaires. Okay? It's too small. Honeywell, which I know we like, too small. It's not too small for people who watch us. For people who want to make a little money, it's not too small. You can buy certain stocks in his environment. But if you're S&P, yeah, he's right. I'm stuck with the 500. Last night, after meeting with 5 chemical analysts, and I'm not bragging, I'm just saying this is how lousy my life is. After meeting with 5 chemical analysts for dinner, I then take home 4 conference calls, including Clorox. I look at them. Some CEOs are doing better than others. I come up this morning and I see that Elliott is trying to rattle Western Dig, which makes a lot of sense. Western Dig is worth a lot more if they break it up. And I say to myself, okay, I have to do the homework because I work for CNBC. That's my job. I don't work for myself. I work for CNBC. Who's CNBC? It's viewers. It would be so easy for me to say, you know what? I got a lot of money. I got a vineyard. Doing well. I don't want to lose any. Cash. No! I'm sick of it.
Yeah.
I'm sick of it. I'm sick, and I love Paul Tudor Jones. I've done a lot of work.
Yes.
But I just think to come on and say that Jay will look for a new job. This darn guy is doing his darn best. He inherited a disease that has killed 1 million people, that has shut down China. He's inherited a war that we're doing nothing other than giving him a couple Javelin missiles. And that's Jay? Jay should go home? Go be with Lissa? Have fun? No. Jay is doing his darn best. And the idea of just coming on and saying, which is funny. It's hysterically funny.
Sure. He's definitely got a hard needle to thread.
But he's doing his best, and he's raising rates. The economy is slowing on its own.
Right.
The housing stocks sell 4 times earnings. The chemical companies are getting crushed. We're seeing the oils do well because of Russia. He may figure this out. But to write him off before he started, when he felt that Omicron correctly might shut down our country, the Chinese, they shut down their country in Omicron. I'm just saying it's not funny. And I love Paul Tudor Jones, but it's not funny.
Yeah. And there are things, David, obviously out of his control. We keep going back to the binary potential outcomes in Shanghai and China regarding the lockdown, obviously the war and Putin's path. But we'll see. I mean, one of his points, as we said, was that the labor supply issues and the product supply issues that we were just getting used to late last year are just now coming to bear full bore on the economy.
All true, and so much outside his control, as you point out, Carl. Jim's already throwing stuff. He looks like he ate a bad oyster or something. I'll be back tomorrow. Jim, next to you, just so you know.
I just think it's just, David, I just think it's glib. You ought to find a new job. I used to do that stuff. You know that?
It is and it isn't. I mean, listen, I always want to listen to what Paul Tudor Jones says, and so do you.
No,
I don't think you want to. The guy has had great insight. He's had a great career. When it comes to macro, I want to listen to him. And oftentimes, he's actually even had the benefit of having been right. So,
oftentimes be right.
He's not necessarily. Yeah. And by the way, he's saying what I'm hearing here at the Milken conference a lot. Of course, there's a lot of concern about what, you'll hear people debate. Well, how many years has it been since rates have moved up? Sometimes it's this 30-year bull market, bull run of bonds, or go back, I don't know how long. But people are talking about this as a seminal moment, Jim, because it's not something we have dealt with in such a long period of time. And the market is still digesting what it really means to have, rates moving up appreciably from even here. Now, we could argue that almost 3% yield on the 10-year is already accounted for a good amount of what Jay Powell has in store for the markets. But we've seen what it's meant to multiples. We've seen what it's meant to growth stocks. And then there are all those cross currents that Carl just mentioned, Jim, which are very, very hard to quantify in terms of their long-term impact.